Hi, dear professor. My name is Ilham, and today I'm gonna present the presentation and the Excel file regarding to the trial balance and balance sheet. So first of course, I know that we have the. I must put here a brief summary of the major concepts found in the chapter one and two. Actually, I got the book, but I didn't put it here because, as you know, we had only one day, and I just looked that book for a little quick, and I found out that that there was a lot of formulas and a lot of calculations, which of course I need to do by myself. It would be better if I'll do in Excel for better understanding. But I found out that there approximately everything is the same, which we learned during the lesson, during the classes, and of course there was some information about the trail balance and about the balance sheet as well. So it will start from the trail balance. Just to for better understanding, the trail balance uh, is the calculation uh, which we are doing before the balance sheet. Uh, it's a, in a simple way. It's just informations regarding to the company, or I don't know, from where I can get the all information to and put it in the balance sheet when I'm doing financial statements, of course. Uh, and Real balance we use only in the company. We cannot provide the real balance uh, uh, to see for other people because it's kind of NDA. It's kind of secret. Because there might be a lot of different information. And so if we will see this table here, we can see that uh, it's kind of simple. In this trail balance, we put here account names and debit and credit. Of course, debit in the left, while credit in the right. If someone if there's someone who don't know what's the debit and credit, so just in simple ways, uh, credit it's what I must give, while the debit what someone need to give me. I know it's not correct always, but for guys who are not doing finance or accounting, the simplest way to understand. Let's look like cash. Like we have a cash in our hands. Let's say 8,300. It's what we have. It's a debit. Inventory. It's maybe it's I don't know. It's raw materials or other things. We have 2,500 in stocks. So overall, always debit and credit they must be equal. And we don't need we must keep it in mind. How to convert the trial balance to the balance sheet? Actually, it's not so hard. Uh, so we after getting all this information, it doesn't matter during the period, during the year. So we can just transfer it into the balance sheet. Let's look here. We have cash, inventory, and it means we have the current assets right now. And equipment as well, 20,000 and 10,008 plus 20, oh, 380. So, and now the question is that why it's 30,800 while here is 34,500. And I did this red lines because because during the calculation, we cannot put 34,500 because here we have a cost of sales. Cost of sales, it's what we need to spend for, that's kind of operational cost. During the sales, we must spend some money, like, I don't know, for managers, for marketing team. And plus, here we have rent. Uh, And overall, here we got 3,700, and here's 4,500. That's how much was sold. That's 4,000 plus dividends from income, 4,500 minus 3,700. It's 800. So so then we got 30,800. It was just kind of simple example. If we will look into the real financial statement in Excel, of course, we can see here the same thing, but uh, usually I don't use trial balance because, in my opinion, trial balance is for operational managers. Uh, because I'm working as a project manager for more than 4 years, and I don't need trial balance. Uh, I can just use the all that information and connect with the balance sheet. Uh, let's look. It's our balance sheet for project, let's say. And as example, here we can see um, uh, it's the cash and equivalents. It's our assets. It's on in our assets in $1 million. From where it's coming? It's coming from cash flow. If we will look into cash flow, here you go. Uh, we can get these numbers from the cash flow into the balance sheet. Uh, $35,000, and here will be $35,000. But before, of course, we got the letter calculations. Uh, okay, let's see the next one, inventory. It means inventory for raw materials. It means how many raw materials we have in our stock, and it's coming from the calculation. Uh, Page 220. So here you go. It means during the starting our company, how much raw materials we had. We had zero, and then how much raw materials we used, and the price of that materials which we already used, and the total is coming to the balance sheet. So we can do this kind of calculation. It's a ready product. It's account table. Here we don't have account table actually, and it's a total. It's a total. Then we have a here. Here we have building and equipment. Uh, I didn't put here for building. It's coming from capex. If we will see here we got 750,000. We because we got we put here amount only for equipment. If we will if we will put here number 100,000, let's change it, and we will if we will go to the balance sheet, it will show us uh, the $10,000. Okay, so here's the equipment, here's the building because it's our assets. And overall, uh, during the 1 year, we have assets one for more than $1 million. So here's the liabilities and the owner's equity. It's retained earnings, equity investment. For example, also I put here unbilled forex gain and loss because we need to change our currency uh, uh, and accounts payable. And if we have a long-term loans, we can put it here as well. So the amount of money in assets and in the liabilities and owner's equity always should be the same. If it's not the same, here we will not get the true true answer. It would be it show us false rather than the true. So I prefer to do the balance sheet in this way rather than doing trail balance and then put it in the balance sheet. I know maybe it's because of the differences between the operational managers and the project manager who are just creating different kind of projects. Because for project managers, at least for me, I don't need the trail balance. I need only balance sheet where I can put all